Hey, 007, good to see you. Lorna, Mirza, great to see y'all. I apologize for being a little bit late for today's session. I was just finishing up our office hour session that was a part of the small account blueprint class. So I wanted to make sure I answered those questions before jumping over in here. But now we are in here. So once again, very excited to answer y'all's questions around the market. We'll talk about the recent AXP $500 challenge trade. And of course, once again, if you guys have any questions at all around a chart, a strategy, maybe a trade you're in a setup, this is the best place to really go and dive in deep to answer those questions. So I am happy to be here to help. Hey, Lisa, good to see you as well. So let's first start with what's happening with SPX. We'll go on to AXP as our $500 challenge trade, and then go on from there to answer y'all's questions. So starting with SPX, yesterday, late into last week, we went up. We tested the ATR trailing stop as resistance that held. We pulled back. We technically followed through with a lower low on those bearish divergent bars, but we started to hold support, right? We were trying to maintain 4,500. Now, technically, we closed below that level yesterday. So that showed some weakness of us trying to break it. Hey, Brian, good to see ya. Couldn't quite get a bullish divergent bar. And then today, of course, we have continued to break down. Now, it will be interesting to see how we go into the close. Basically, what I'd be watching into the close is, do buyers come back in and bounce the price back up to where it's holding ideally for buyers and bulls, it holds the 30, but can it maintain trying to hold the 10 and bounce back up above the 30? Or do we continue to see a bit more selling into the close? Certainly, our bullish signal on the compound breakout tool is currently trying to get canceled back out into a bearish pullback signal. What's interesting is the last 2 days are happening on rising momentum. Usually that favors the bulls a bit more. But if we do start to see, like tomorrow, we continue to move lower and we get a red bar, then it could be a case of where this just barely pops above the zero line and then reverses back below it. Let me see if I can find a good example of that happening in the past. I don't have one on SPX, but sometimes that's not uncommon when you get one of those reset moves, where it usually you don't want to see it break the 100, right? That's the cleaner setup. So here, for example, momentum reset to the zero line, never crossed below it, and then started to build up. And so what happened? Well, we consolidated and then we went back into a bullish trend. That's the ideal situation for how you use that signal on momentum for the awesome oscillator, for example. But sometimes what happens is you will cross above the zero line, but barely. You can barely see the bars when it happens, right? It kind of remains flat and then it reverses back down and basically crosses back below it. And then you get another bearish move. So that could be in play. A little early to tell at this point, which is why I mentioned I'd want to see how this goes into the close today, on if buyers can come back in and kind of try and support this on a bounce and we kind of stay chopping between the 30 period simple and the ATR trailing stop up here, or if the sellers continue to drag this down. Because if they do, especially if we start to break the 10, well, then it's much more viable that we're going back down here towards 4,400 or to the 100 period simple at 43.40, and we're stuck in a range of consolidation. Certainly the Bollinger Bands are flat, so that's a sign of consolidation. And we know that's a possibility because the weekly chart has been at weekly exhaustion levels. We've been talking about this the last couple weeks. We know that that's been in the process of resetting, and it's not quite to the zero line yet. So we could still be in a few more weeks where we are kind of stuck in this chop, and allow that weekly momentum to get the full reset it's looking for, which as soon as this pops up, I'll show you guys what I'm talking about here. There we go. So there's the weekly momentum. It was at the top of the axis. It's resetting. We have a consolidating signal on the compound breakout tool. The trend overall in the weekly chart is still bullish. So at this time, I would still be more bullish than bearish, bigger picture point of view. But you can see the Bollinger Bands are flattening. I mean, this was a beautiful run that we had to the upside from March 20th higher. And so all of that's a clue that we could take a breather, right? We're not the SPX it's like it's always in a marathon, right? So it can't just keep going in one direction. It's got to take a breath. It's got to pause for a second. And so that's kind of what we're doing right now is we're pausing. It's taking a bit of a breath after this long sprint to the upside. And then we'll see from there whether or not it's going to continue the sprint higher or if we potentially get a stronger pullback. Right now, I would still be looking for the move higher because that's, like I said, the overall trend is still bullish. That's what the technicals are telling me. But want to be mindful of that just in case. So always got to be open to those possibilities, if you will. Let's go ahead and talk about AXP. So AXP, yeah, it's still moving lower, guys. I mentioned in the alert that if you wanted to hold on for a bigger profit, or if you had multiple contracts and wanted to leave a runner on, it's not a bad idea to do so. We did talk about this actually in the office hours. The intraday charts still looked nicely bearish to the downside. Let me see if I still have the intraday charts pulled up and I'll bring them over. I do. So here are the intraday charts, right? Still nice move to the downside. We have an hourly squeeze that hasn't yet fired. Momentum's crossed below the zero line. Here, arguably, is an example of where you barely cross above the zero line and then break back down, right? We have a bearish signal on the compound breakout tool. Bollinger Bands are flaring open lower. And so, just a beautiful move to the downside. If I had two contracts on this, I'd probably leave one out as a runner myself. But I only had the one contract out there because it was in the $500 challenge account. And so let's kind of talk about why I took this trade in this entry. So I did this, of course, over in the Moomoo account is where I'm currently doing the $500 challenge. Let me pull it up here really quickly. So here's uh, it's being slow. There we go. Here's the $500 challenge account currently. So here was the open order from yesterday. We jumped into AXP, the 160 strike at 80 cents. And then I just had a profit target of $1 on this. So that ended up filling, right? Closed out at $1.80, locked in $1 profit. That's a 125% return on our risk. So certainly not bad. Now, what was the reason why I jumped into this trade? Well, for starters, let me pull it up right now. For those of you who maybe are still in it, it's up to 220. So, like I said, it's still looking good on the charts. But we did this week's expiration. We kept it very short dated. So this trade was either going to work or it wasn't going to work. And the idea of jumping into it was really based off of the bearish divergent bar, right? So we had this consolidation. We started to break lower below the 100 period simple moving average. You could argue this is attempting to start to go into a bearish trend. I would also argue it's still a bit of chop. But what I liked about it for our bearish setup was we were still trading below the 100 period simple. And yesterday we made a bearish divergent bar, not quite off of those levels, but still clearly holding them as resistance. And what I would wanted to do was keep the account a little bit more even between bullish and bearish trade ideas. And so obviously in the challenge account, we only had the one trade idea, but in the mentorship, we're kind of mixed on bullish and bearish trade ideas. And this was one of the bearish ideas that I was eyeing yesterday. And so with the bearish divergent bar, with the trend technically being bearish, the 30 is below the 100, the 10 is below both of those. So that's starting to be a stack down formation. And the follow through rate on bearish divergent bars for AXP is actually pretty good. Usually, the bearish divergent bars are less likely to follow through compared to bullish divergent bars, mainly because normally we're in a more bullish trend in the market, right? The market's usually an overall bullish beast, which is why bullish divergent bars usually have a better follow through rate in general. But for AXP, our bearish divergent bar follow through rate is still like an 83%, which isn't bad. And so because it has a pretty good success rate on following through on bearish divergent bars, we're making one in what is turning into a bearish trend while holding resistance levels. I thought there is a good chance we could follow through with a quick lower low, at least back down towards this price support level, which is where we're running into right now. And of course, this could start to become a rollover trade, right? Where it basically rolls back down, kind of takes off to the downside. The only caution I have about that currently, and if I did jump into something like that, I would definitely give myself more time than trying to play this week's expiration. But the reason you might consider that is because of the bearish trend and how this looks in the squeeze setting up. The caution is currently the Bollinger Bands are still flat. We're not getting any red bars yet on momentum. That's still in the process of resetting. So that's more in line with chop. We still have a consolidating signal in the compound breakout tool. And so between those three things, and of course the squeeze starting to build up energy, we know we might actually stay in consolidation a bit longer, build up some more strength around the squeeze, and then maybe it takes off to the downside, or maybe it tries to reverse back up, right? Either way, if I were playing this more for a swing move lower, I would definitely, like I said, want to go out maybe to the October monthly expiration and then excuse me guys, and then look at a long put or something like that to play lower at that point. So, one second guys. Okay, apologize about that. So, overall, that's how I'd look to play it more as a swing move. But like I said, you might wait a little bit more for confirmation on some of these other indicators before jumping in, or at least if we don't really break past this 157 level, right? If we do continue to sell today and we're starting to break 157, then I like the possibility of jumping in because it's trying to break price support. But right now, we've gotten the lower low that we're looking for, and we're right around this price support level. So the fact that everything's still more in consolidation on the other indicators and you're at price support, for me, it's not a place to jump in at. I either want to see confirmation we're breaking price support, right? And then I'll just be a little late to the game and try and play it that way. Or I want another pullback move. I would love to see a pullback back up towards 162 if it holds, especially if it gives us another bearish divergent bar. By all means, let's reload the boat and look for the quick scalp win or to play for the bigger swing move to the downside at that point. But that was the AXP trade. So nice quick win for the start of the month for our $500 challenge account. So we're already up $100 in the account, and we'll see if we can't put on some more trades if there are any more setups out there to keep the account green for the month and take those profits at the end of it. And then Bob, it's definitely check out the link that mirrors is sent, but it is a proprietary indicator. It's one I had Eric create for me over here at Simpler. So certainly feel free to check it out. But it is one of my favorite indicators to use both for a quick overnight profit like we did with AXP, as well as sometimes an entry for a bigger swing move to occur. And you can use that both on, obviously we used it on the daily chart here, but I'll use divergent bars on smaller time frames like the hourly, the 30-minute chart. And then technically you can use it all the way up into like the quarterly or yearly charts if you really want to. So I thoroughly enjoy that indicator though, clearly, as you might tell from my alerts, because it usually is incorporated when I jump into a trade idea. That was AXP. So nice quick win there. If anyone's still in it, well done, because it's, another, we jumped in at 80 cents. It's 40 cents higher than where I closed out of it. So that's an extra 50% return added on there if you're still in it. But once again, I would be mindful of this level. So you might keep an eye on the, I must have closed out of that chart. Let me see. But basically keep an eye on the 1 hour chart over here. You have the squeeze. So this might be the one that you watch if you leave a runner on or you're still in it because you want to see how it goes. If it starts to stall, like notice that support level there, I'd be mindful of that because that's right around that range of price support that we identified on the daily chart. If we can't really get past that, then you might want to start locking in your profits. If it does look like it's going to keep going and that squeeze is going to fire, then all means hold on to the ride because it was a nice move. So does anyone, I guess before we continue here, does anyone have any questions around any setups for today or trades or charts or maybe around indicators or anything like that, I'll give you guys a second maybe to type it out. Otherwise, I'm happy to just, go through some scans with you guys and see if there's anything that looks good to take a peek at later in the day to jump in on. And great question, SP. So SP is asking, how does the compound breakout tool show consolidation? So usually it shows consolidation when the signals start to print back rather quickly. So it'll either be a case of this, right? Notice how you're just getting one line printing back to back boxes. It almost looks like a string of Christmas lights, right? Same thing here. So when you see something like that, that's usually a sign of consolidation. Notice when that started, we were chopping right around the 100 period simple. We were basically going into a wedge pattern before we finally broke. And notice when we started to break, we got more of a proper bearish pullback signal to play for that run lower. Then we started to get a pullback signal. Once you start to go into a more bearish trend or you have technical resistance levels above you, and by technical resistance, I mean things like simple moving averages or EMAs, right? Depending on what you use, the ATR trailing stop. When you get a pullback signal like this with resistance above you, it usually means that you'll go up into those levels and test resistance. So we started to move a bit higher. We broke above the 10, didn't quite make it up to the 100 or 30 though before it canceled back out into a consolidating signal, right? Immediately canceled and then we started getting back to back signals. And overall that's what we've been doing here is consolidating. Sometimes though on consolidating signals, let's see if this has an example of it. I guess you could argue this here. So, let me zoom back out some. But like here for example, it can be so sometimes this isn't the best chart for it, but sometimes it can give you like valid signals. So like we got a bullish one and then it immediately canceled out into a consolidating. But sometimes it'll be like a valid bullish, a valid bearish, a valid bullish, but it's still printing back to back, right? It doesn't last for very long. And all of those can still be clues of consolidation as well. So those are the two ways I typically try and find it. Like so here on the 1 minute chart might be a good example where it printed the bullish signal and then immediately canceled out, printed a bullish signal, immediately canceled out. And you can see we're currently chopping, right? Now it's the 1 minute chart, so that's easily going to change, but you get the idea. And then Papillion's asking the bar on AXP yesterday was a bullish? No, it was a bearish divergent bar. So I know I have candles up right now, makes it a little bit trickier to see, but this was a bearish divergent bar. And somebody asked me if I could I'm know sometimes I've gotten talk about how it's hard to see the colors on your charts. It's not hard on mine, but it must be like how it goes through or whatever displays maybe you guys are using aren't as crisp as mine or something. So I'll play around with the colors and see if I can't find a color that really sticks out more between bullish and bearish divergent bars. But yesterday was technically a bearish divergent bar. And so that followed through with the lower low that we were looking for today, Papillion. And then Jay Smitty was wondering what are some good indicators for intraday and day trading? Well, I certainly prefer the divergent bar indicator. That's one of my favorite to go off for intraday trading, especially if it's on something like SPX, because we've noticed one, it's not a bad place to get a follow through for higher highs or lower lows. But two, sometimes what happens with the divergent bar indicator is specifically on SPX for an hourly chart is where we've noticed this. Um, but basically, I'm trying to see if there's one recently. I don't think there was. But sometimes what happens is you'll get a divergent bar that prints and it won't follow through that day. Well, when that happens, there's a good chance that it follows through the next trading day, is what we've noticed. Usually, the divergent bar, I call it the 3 bar rule. So I usually look for the follow through to happen within 3 bars. But when it doesn't, and it's specifically on SPX from an intraday perspective, then I'll sometimes play the overnight move with the idea that the divergent bar follows through the next day. And it has a really good consistency of doing that typically. So otherwise, Jay Smitty, for the outside of the divergent bar indicator, which like I mentioned, I also use on the daily chart and stuff, as you saw with AXP. Um, it's really the same setup that I look for on longer term swing trades is what I look for on the intraday charts. The only difference I would argue is on the intraday charts, I really try and take several different time frames into consideration. Usually I look for, if I'm not doing an entry purely off of a divergent bar, for example, then usually I like to time my entry off the 5 and 10 minute chart on really volatile days where things are just like falling to the downside or skyrocketing up. The 1 minute chart can sometimes be the only pullback entry that it will give you because it will just look like on the 5 and 10 minute, like on the 10 minute chart, for example, you can see this was just falling to the downside this morning. It never quite gave you a pullback to say, hey, here's an actual technical pullback entry to jump in on. And sometimes when that happens on the 10, it's also happening on the 5. And so the pullbacks can sometimes will only appear on the 1 minute chart for really volatile days. Today, though, for example, we actually got the pullbacks on the 5 minute chart. So, for example, when it sold off here, bounced, consolidate into the 10 that held, we still had a bearish signal on the compound breakout tool. Momentum was still overall bearish. And of course, it matches with the bearish sentiment on the 10 minute chart. That would have been a re-entry to take it short again. And then if you did, you could have taken it short another 10 points and either continue to hold, or right here, right, was another entry. It bounced back up a little bit, tested the 10 started to fail. That would have been another place to consider getting short from. And then once, of course, the Bollinger Bands really start to flatten out, that's your clue that if you haven't already locked in profits, consider doing so. And then even from here, watch the chart, because if all we're doing is taking a breather before the next leg lower, right, this could start to create another re-entry. Notice that on the 10-minute chart, this consolidation on the 5 is finally where we're getting a pullback on the 10-minute chart. And the 10-minute chart is not breaking right now. It's 10 period simple now. If it does, then we might get a bit stronger of a reversal. But if it continues to hold the 10 and it's just allowing, it's taking a pause to allow momentum to reset some, then we might be getting ready to set ourselves up for a rollover trade. Also, keep in mind, of course, from an intraday perspective, you want to be mindful of the time of day it is. So usually, of course, you get a lot more action within the first hour or two of the day. Then you start to lead into the lunch hour, right? So 10:30 is Europe's close. 11 o'clock Central. These are Central times, by the way. 11 o'clock Central starts to become the lunch hour. And during the lunch hour, it's not uncommon, usually, to get more consolidation chop. That's where the market takes its breather from intraday moves. And then as we pick back up going into the end of day around 1, sometimes a little earlier, sometimes a little later, but around 1 o'clock going into the close is usually when you'll pick back up into a trend move again, whether it's a reversal back to the upside or whether it's, rolling back down to continue the move lower overall. So and I think a lot of traders are like this here at J Smitty, where for intraday and day trading setups, they oftentimes use the same technical indicators that they use from a daily chart perspective, but it's all just about understanding that you're finding it on smaller time frames. So that's why I like to find things that line up on the 5 and 10 minute chart, just for a little bit more um agreement between the two. And then also understanding, of course, that because I'm doing this off a smaller time frame, it might be a faster move, it might not last as long. And so just being prepared for that flexibility as well. Hope that answers your question. JC, you're brand new here. Welcome. Or GC, I should say. I think I said JC. GC, welcome. Would be great to understand your mindset and process for finding and evaluating trades. Absolutely. So, for myself, if I'm not busy in the morning like I was this morning, I'll usually look at my intraday charts. I'll evaluate the trades that I currently hold and see if there's any action I need to take. And then from there, I'll try and do some scans. So there are a few different places I like to go for on scans. The first place is actually over at Simpler Trading itself. And I'll go to the scanner service that they have there. And my favorites to look at are the daily bullish and bearish continuation pro scans and the daily bearish and bullish nested squeezes scans. And so this is a great place to go to. I usually sort it by volume. So, start with the highest volume because obviously, usually that means it has the most liquidity. And then I'll run through these charts and see if there's anything I like, and then take action accordingly. If there's not, then I'll go over to my Thinkorswim scanner and I'll scan for either divergent bars are one of the things I like to scan for. So whether or not the daily chart is making a bullish or bearish divergent bar. As well as recently, I've been doing more scans trying to find true lows, which is this indicator right down here. Can oftentimes signal a potential discount price to play for either a shorter term or bigger picture run to the upside. So I've been scanning for those recently. And basically, what I'll do is I'll mark down anything that I think looks good or valid within my trading journal. If I think something looks really good, I might take a look at that moment at the intraday charts. And if there are like a lot of squeezes on the intraday charts where it looks like, hey, things are getting going now, let's jump in, I'll jump in early. Other times, though, I usually like to wait closer into the close of market for more swing trades. I'll go back through that short list, see if the setup still remains valid. And then if it does, I'll jump in usually at the end of the day for a more swing trade mindset. And that's how I go through finding trades. And as far as evaluating ones that I hold, I, of course, have, things like line in the sand. I personally, on all my trades, as you can see, like with the AXP alert that I just sent out, I always risk 100% what I'm willing to lose. So I'm all about keeping my risk as small as I can on the entry. And then, if it breaks the technical point of view, that doesn't mean I won't try and protect capital. But that way, I'm not trading off of stops, right? I'm not personally a fan of doing trading off of stops. Now, if it's futures trading, that's a completely different story. But with options trading, I like to give the chart time for it to work out. And so if the technicals are still valid, I usually stay in the trade, which is why, once again, I keep my risk very small because if it's still a valid setup, but let's say it's not getting going like I need it to, then, I might still end up losing on that trade, or I might need to roll it out and give myself more time. But if the technicals actually break, then that's the point where, it's crossed my line in the sand and I look to jump out of it. So that's it in short. Obviously, there's more to it, but I hope that gives you like a quick Cliff Notes version, if you will, of how to do that. Mike, MVDA. I feel like I mentioned this in the office hours I had earlier today. I literally feel like it's Groundhog's Day with me trading this. And like, I might just put MVDA on the back burner for a second without trading it, just because this is like, I think the third time I've looked at a trade here where typically, right, the normal situation is it follows through, it works out, you take the win. But this is like the third time where MVDA's been a problem child, if you will. And I'll pull it up and explain why here in a second. So the first recent trade I did on MVDA was back here off of this bullish divergent bar. And at the time, we were still in an overall bullish trend. We had pulled back into support. We had a recent true low. We had a squeeze setting up. And MVDA usually has a really good follow through rate on bullish divergent bars. So for example, right here is a bullish divergent bar that followed through with a higher high. Here was a bullish divergent bar, followed through with a higher high, bullish divergent bar, higher high, bullish divergent bar, higher high. Right. So the idea is this one would get the quick higher high follow through. Instead, it immediately sold off and then continued to sell off the next day. And that one never followed through within the 3-bar rule. And so that was the first recent trade I did on MVDA, and I ended up with a loser on that. And then I did an earnings trade off of it. And the earnings trade worked exactly as I was looking for it to work. But the market makers would not fill me on the profit I was trying to take at the open. And then, of course, for those of you that were following along with MVDA earnings, it immediately sold off from that level and kept selling. And so the market makers never took my order, right? I never got a fill, so I never got the profit locked in. And unfortunately, that one ended up being a loser as well. And then once again, here on MVDA, we had a bunch of nested squeezes, meaning we had a bunch of intraday squeezes setting up. We were right at support. It was looking like a good pullback entry to play for a bounce. Like I mentioned, MVDA usually has a pretty good follow through rate on those bullish divergent bars. And so all I was doing was looking for a retest of 500, not even necessarily a strong push past it, just a test of that $500 price level again. And then what happened today? It sold off. So it almost is like a mirror version of what happened back here. So I'm a little disappointed in this. Now, the good news is technically we have the 3-bar rule for the divergent bar. So we still have 2 more days to try and get this to follow through with a higher high. Maybe we can get a bounce. I'm not holding my breath on it at this point, which is why, once again, understanding what your capital risk at the very start of a trade is so important, right? You don't want to risk more than you're willing to lose. Today might have been one of those days where, the price drops way past your stop, and then all of a sudden your stop is a favorable fill. The market makers didn't stop you out, and now you're stuck with a big loss, right? That's why I like to control the risk at the very start of a trade. But yeah, this is a bit frustrating to see. So we'll see if we can find some support and get a bounce back up, or if buyers can step back into the market to help us out. But not a fan of it, Mike. Not a fan of it right now. So, and then Papillion, it closed higher. If you're talking about AXP, just to go back, it did technically close green yesterday, right? I think it was up like 30 cents for the day compared to Friday. But the technicals that create the bearish divergent bar, right? The inside technicals that it needs to create a bearish divergent bar, that doesn't matter. It doesn't matter if it's green or red for the day. It's other criteria that's needed to make the bearish divergent bar. And so the bearish divergent bar criteria was met yesterday. It technically closed positive, right? It was up on the day, but the criteria for creating the bearish divergent bar was also valid. And so that gave it that possibility of a lower low the next day, even though it was technically up yesterday a little bit. So hope that helps. I see Lorna might have already answered the question. So sorry for being a little late. 007's asking, how do you maintain that's a big word, 007. I'm not there today. Jedi mindset, no matter if you're winning or losing, how do you keep an even keeled mindset, that I know, and remain one with the force? You're using too big of words on me today. So basically, how do I, it's all about risk, in my opinion, on keeping an even mindset, right? The reason why, obviously, I'm not happy about what MVDA is doing, but the reason why you're not hearing me, curse or have this really angry tone or anything like that is because I'm within my risk tolerance. So if I go into the trade, and I know this seems almost counterintuitive, but if I go into the trade idea with a risk out there in line with the idea of I could very well lose all of this money, right? And go through the idea of I will lose all this money. And it's not to say I want to or anything like that. But if I have that mindset out there at the start of the trade, then it really helps me control my risk. And so by controlling the risk and staying within the risk parameters for myself and my account, I know that I'm never over investing. So therefore, I know I'm never blowing out my account. If I get hit with several losers in a row, I know it didn't blow up my account, but it's certainly a clue to say, okay, Allison, let's go back and look at the trading journal. What happened with these trades, right? Were they really valid technical setups? Were they more lotto trades? Maybe you need to pull away from the lotto trades. Are you using a strategy that's just not fitting with the market environment? Should you be maybe using that strategy like the overnight profit strategy, but instead of playing it directionally, playing it more through credit spreads? And so that's kind of the thought process that I'll go through and see, okay, why hasn't this been working? And what can I change about it to try and make it work again? And so that's kind of how I keep that even keeled mindset. Is it all starts for me at least with getting a good grasp of my risk. And if I have a good grasp of that, and if I go into each trade kind of with that thought process of I could lose this all, then it really helps limit how much capital I'm putting out there, and in turn helps keep me from blowing out my account, which I think, right, when you get into like a losing streak, which happens to all of us, it's very easy to start to get emotional about it. And if you were over risking above your risk tolerance, or you kept putting out big hitters thinking the big hitter could offset the losers, or some kind of mentality like that, then that's usually the path that leads you to the dark side, and that makes you blow out your account. Whereas if you are really mindful of that risk from the very start of the trade, doesn't mean you can't build into a trade idea or anything like that. Um, but it helps keep you, on the right side of your account growth overall, in my opinion. So I hope that helps you out, 007. But that's what I find is what really helps me. And then GC, so for AXP, that was a $500 challenge trade. So first of all, the majority of my trades do get posted within the small account mentorship. I'm in there basically every day into market close for either an hour, or on Thursdays it's a half hour, where I'll walk through these trade ideas. I'll walk through the charts, why I like them, why I don't. And then, if I decide to jump into it, I will. So if you ever want to be with me live on the mic when I'm evaluating the majority of the trades that I take, certainly that's the place to go to. But for the $500 challenge trades, I also post those in the options room as well as here in the simpler essentials room. So if you scroll back up through the alerts, you'll notice yesterday into the close at 244 is where I opened this AXP trade, and then closed it out this morning for the quick win when it reached my profit target. And I am about to, Papillion, for MVDA. I'm about to put it on my do not trade list. At least at least short term. It's not like gold. Gold's like on my I'll never touch gold again trade list. But MVDA I've had some luck with, obviously, in the past, but I don't know, the last couple weeks it's like, what is Allison doing? Okay, we're gonna do the opposite. So I think it might go on my short term no trade list. I would agree with you 100% there. A little frustrating to see that. And exactly, Corey, exactly. Like Rocky mentions, shortening your time frames can certainly be helpful. And she is the GOAT by far. And yeah, GC, you absolutely have an account rep. Oh, Max, please no spoilers. Twitter's given me enough spoils, unfortunately, for the Ahsoka series, but I'm trying to wait until I officially go on maternity leave, because I figure I'll be having to sit around feeding right, feeding the child. So that might be the best way to actually catch up on some of these Star Wars shows that I've been wanting to watch and just haven't had time for yet. So it looks good though. I'm excited. I heard John, I think, mentioned the other day in one of the rooms that he wasn't as big of a fan of it. And I was a little sad because Ahsoka's my favorite, I think my favorite Star Wars character. I loved her in Clone Wars. Obviously she was in, what was it, Rebels? I can't remember the name of that one now, but the other animated series, that one took me a little bit of warming up to, but once I did, I really enjoyed that. And so I'm hoping this is good, because when she popped up earlier in the live action series, I was like, oh, it's so exciting. So I'm glad she has her own series, but I hope it does it justice. You always get, I don't know, ever since M. Night Shyamalan did the Avatar: The Last Airbender movie, it makes me very cautious about having my hopes too high for something I really like, and then having it done in live action and it completely falling apart. So yeah. Oh, okay. And then Papillion, I'm so sorry, Papillon is how you pronounce your name. Thank you for that, Lorna. And thank you. Yeah, if I ever mispronounce your name, please let me know. I am definitely dyslexic and can very easily butcher a name, but I also like to know how to pronounce it so I remember. So Papillon, I love that. And then SPX levels to the downside, Evelyn, let's take a look. Let's pull up it on the daily chart, and then we'll talk about it. Certainly on the intraday charts right now. This looks like it's wanting to roll over, right? Especially because the hourly chart, talked about this earlier in the office hours session, but we were making a third deviation Bollinger Band snap with the squeeze firing and momentum crossing below the zero line. So all of that has bearish weight to it. The third deviation Bollinger Band snap was a clue that we would either stay within that price range or continue to move lower. And so you can see we've continued to stair step down. Bollinger Bands are still very much flaring open. And obviously, the squeeze is just firing. So we still have energy coming from that to the downside. And we have a lot of room left on momentum to where it can continue lower. So 4450, I would be mindful of as a psychological level. Um, we have seen that price level kind of hold up in the past whenever we've traded around this range recently. But outside of that, the 4440 level has also been a price level, but it's currently a technical level too with the 100 period simple. So the 4450 to 4440 would kind of be my next target, which we're pretty close to. Um, so, that's why personally I'm not wanting to necessarily jump into a trade here at the lunch hour. But if resistance continues to hold and we start to get maybe red momentum bars or another bearish signal on the compound breakout tool on like the 5 and or the 10-minute chart, that would make me want to try and trade something down into that range. Um, if we hold here though and start to bounce, then obviously on the 5-minute chart, we're not too far away from resistance being at 4465, 4460-ish. But bigger levels to the upside, I would say 4470 with the ATR trailing stop, 4480 with the 30-minute simple moving average. 4490 would be a very big level. I don't know if we'd get that strong a reversal to the upside. Not saying we can't, but that would be currently where the 100 period simple is on the 5-minute chart, and it's also in line with the 10 period simple on the hourly chart. So usually what I like to do on some of those intraday levels is the more time frames you have an agreement, right, the stronger that level is going to be. So 4490 I would say is going to be a stronger level because you have resistance there on both the 5 and the hourly time frame. Hope that helps out, Evelyn. Yeah, of course. And GC, I typically don't. I'm not a fan of stop loss or stop limits personally. And the reason why is because at least, and I'm not saying this is true, but it felt like every time I used to put that on early in my trading career, the market makers would come meet my stop, tag it, and then the chart would reverse back the other way, which would ultimately have been favorable for me. And so what I like to do is what I like to do is I am okay risking 100% of that capital at the start of the trade. And this is kind of what I was mentioning to 007 about keeping in that even mindset. Because with stops, not to say this always happens, but there is always the possibility that if it's a stop on an overnight move, or if you have something like the flash crash happens, sometimes those stops don't get triggered, right? And then all of a sudden, if it doesn't get triggered and you're well past where your stop was, that stop all of a sudden becomes a favorable fill. And the market makers typically aren't going to just give you that favorable fill, especially if it's far away. So by going into a trade, knowing I'm okay losing 100% of the capital, that's how I like to trade. And then if it's breaking the technicals, then I'll cut it. So for example, there's a trade right now that I have on an Apple, right? And this is a longer term bullish trade based off of a recent true low setup. Thankfully, we started off with a small amount of capital to begin with because, we're kind of in a tricky spot with the market. Apple clearly follows the market for the most part because it's such a huge component of it. And so I knew with the resistance levels that we were reaching on SPX and NDX and stuff, if it started to pull back, Apple would likely pull back with it. So I started with my risk in general well below my risk tolerance. But we were looking at a bullish sentiment off of these levels here, and I'll wait for the rest of the indicators to show up for a true low setup. And we went out to October to give ourselves time, started to get a small profit in the trade. Arguably, I guess we could have taken it. I'm looking for a bigger move though off of this setup. And then what happened? Well, today we're pulling back. Well, if this breaks the 100, if it breaks the ATR trailing stop, that's my line in the sand. And if there's any capital left to protect, then I'll protect it at that point and I'll get out of the trade. But if it pulls back and holds, this will actually be a place that I build into the trade to look for that bounce and potentially that continuation of a bullish move to the upside. So I probably won't do it today. I certainly want to watch how this closes. Once again, it's interesting that we're pulling back on a day that has bullish momentum. Usually that favors the bulls, unless this is going to be a quick turnaround move and it drops back down. But really want to see, one, how this goes into the close, if buyers can step back in or not. And if they can't and we continue to pull back, how does it hold this level? And if it can't hold this level and there's any value left on my trade, I'll protect it. If there's not any value left on the trade, then I already went into it with the idea I'm okay losing 100%. So that's how I like to trade personally, is I go in with a much smaller risk tolerance, or a risk well within my tolerance that's not going to blow out the account or anything like that. And then I let the technicals guide me on when I should cut a trade, or when I should add on, or when I should hold. And I kind of let that be my guide, outside of course, something like AXP where it was a profit target, which, I mean, man, that is just selling. So clearly I should have had a bigger profit target on that to the downside, but it triggered mine. So I was more than okay taking the win this morning on it, especially after seeing MVDA do what it's doing currently. Yeah, and of course, GC, not a problem. And that is basically my time, guys. So thank you so much for joining me. As always, may the trade be with you, my fellow Jedis. Like I said, these intraday charts are looking weak. It looks like we might be actually to roll over here. So 44.50, obviously we're not that far away from. Bigger target 44.40. If we start to break that, then 44.25 would be the next level I'd play down into. But the 100 period simple is always, a tough place to try and break, whether it's resistance like we saw here or as support. So don't be too surprised if it stalls at that level. And then maybe if we're still really wanting to sell off, tomorrow is the day that we actually start to break below it. But those would be targets right now I'd have to the downside. As always, though, you guys have a great rest of your trading day. For those of you in the small account mentorship, I will be back on for the last hour of market and look forward to trading with y'all then. Bye, guys.